In this video, I'm going to show you that workhorse trade that we talked about last week. But before we get there, I have a great covered call buy and hold case study where I'm going to show you where using a great stock, I was able to write many covered calls, collect many dividends. And quite frankly, I made quite a bit more money than the typical buy and hold investor. I'm going to show you that before we get to that awesome workhorse covered call, for which if my shares are taken away, that's $5,400 in a short 40-day window. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red-hot covered call video. Well, today I got a treat for you. I'm going to show you that workhorse trade for which I bought 500 shares and then wrote a covered call. Now, this was a part of a wheel trade that I started, did a video here on YouTube where I sold a cash secure put. But things happened along the way. I decided to shift gears. I'm going to show you that trade, and we're going to talk about why I did it. I get questions all the time from my members. Why did you do what you did? I'm trying to follow you here, and you sort of went left when I was thinking you're going to go right. Well, that's what I do. I am always proactively trying to fall forward, right? I always buy back my options. I'm always looking to make a green trade. So I'm going to talk about that trade, and I think it's going to up your game. And in particular, for a lot of you small ball players that have small account sizes, you know, I've been doing a lot of videos on stocks that are inexpensive and you can get in the game. Now, what I want to do today before I get to that trade is show you a great covered call case study that I did for my members. I think you're going to like this because one of the things that absolutely peeves me is when I get the naysayers, and trust me, my little YouTube channel, believe it or not, I get a lot of naysayers saying, look, had you just held the stock, right? I get that all the time because in this greatest bull rally of the modern era, you know, you have all these haters out there that just throw it in my face that I have picked great stocks, made a lot of money, but had I just held the stock, I would have made even more. Well, I have a case study that I want you to see, okay? And I did this for my members. You're absolutely going to love this. It's available for you online as well. So look, let's go ahead and get to this. If you like what you're hearing, I want you to subscribe to the channel. It's right there. It's free. I come back every week showing you my trades, talking about them. So maybe you learn something. Maybe you get a little closer, because when you get a little bit closer to something, chances are you'll do it. You'll get in the game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And throughout this video, I'm going to be mentioning this case study that I did for my members. You know, if you go to CPT Dashboard and click Upgraded CTP Dashboard, that is where I have my premium membership. You get to see what I offer. If any of that interests you, or any of what you're about to see interests you, I want you to go there because I have a 1 free month offer. Now let's go ahead and get to this because we still have to get to that workhorse trade that I want to talk to you about. My case study for a covered call stock that I purchased over a year ago. Now it's 386 days ago, and I'm using this stock in particular because it's the only stock that I have for which I can really do a 1-year case study, because most of the time when we do any sort of analysis, we always use that 1 year, right? Are we beating the S&P 500, the annual returns of the S&P 500? So I don't have too many stocks that I've been rolling with where I bought the stock and literally kept writing covered calls, selling premium for an entire year before I closed the trade. Now, I have a lot of them that I traded many times, and I've told this story before. Roku is a perfect example of that. If you go to my website, ctpdashboard.com, download the cost basis tracker where you can keep track of all of your trades and determine what your true cost basis is with all the premium you've sold. That tracker has 10 elements to it. I had to add an additional 10 elements to my personal Roku tracker because I did so many trades. But it still wasn't a year. Now, my 3M trade turns out to be a little over a year, so we're going to go with it, okay? And what it is this case study. It's a case study of the premium seller versus the buy and hold investor, okay? Because again, I get this all the time where that buy and hold investor will absolutely say, had you just held the stock, and of course they always use all of the examples I have where I bought great stocks and now that stock's trading much higher. Well, I can give you, the naysayer, many examples where those same stocks are not trading at all-time highs. And in fact, 3M is one of them. And I think you're going to enjoy this. These are all real trades that I have done. And I'll tell you, man, this just gives me vindication. You know, when I show you all of my trades and the money I've made, just as a scoreboard for the success we're having, you know, when we see it really fortifies to me that I'm doing the right thing. Because trust me, I've had that FOMO. I've had the coulda, woulda, shoulda, because I have owned Adobe Paper at 148 and it's trading for over 500 now. I have owned NVIDIA at 150, wrote covered calls on, had my shares taken away at 200, and it's trading above 500 now. So please, I understand where you're coming from. But you know, when you're in retirement or you're using your portfolio to generate income, we need cash on the table, right? So all these buy and hold investors, you're not putting cash on the table to pay the bills outside of dividends and maybe a special dividend. But for the most part, you're buying the stock and you're holding it, right? Well, when we sell premium, we write covered calls on the shares that we own, or we sell cash secure puts based on the cash we own. We are printing money. We are literally offering up our shares or offering up our money. They pay us up front, right? The trade does not happen unless that person on the other side of the trade pays me. It's that premium that I pocket and I pay bills with, right? I live the good life. I take my wife out. I pay for my kids' college. That is spendable cash. I want to make that distinction here because my entire premise to my YouTube video channel is this. I'm in retirement, okay? I have a portion of my portfolio specifically set to generate income. It's one thing to own an index fund and you've made all this money, but if that index fund doesn't churn out monthly cash to pay the bills, well, guess what? You're not paying the bills. You're not eating, right? We need to learn how to make money, okay? Stock appreciation is great, and I have a stock appreciation portfolio, but we have to learn how to put money on the table to pay the bills. So looking at this case study, I'm actually very proud of it, to be honest with you, because this is what I do, okay? This is what I love to do. And I'm going to briefly go through this. And this is the write-up that my premium members get, man. I try to go the extra mile for anybody that's going to put skin in the game for me, okay? They want guidance. They want coaching. Look, I don't give stock picks, okay? I'm not a stock selecting service. What I do is give all my members the tools, right? I let them see the world through my eyes. A more active trader, a more active, successful trader. And hey, look, at the end of the day, that's all I try to do. I try to up everybody's game. Now, with that said, let's talk about this 3M trade. So I'm going to briefly go through it. If you go, see the blog at the top? If you go to ctp-blogspot.com, you'll see this blog post. I'll break it down really quick. So this case study is 386 days. It's on 3M, okay? So I bought 3M some 386 days ago. Now, I'm using 300 shares because when I went back and did all the data mining for all these trades, that, by the way, all of this data comes from my total tracker. From 2019, 2020, I combined the data. So every single trade is there. Every single dividend's there. Every single premium is there. If you use the free spreadsheets that I post up on my website, I'm telling you, man, it's going to keep the numbers in front of you. You really get a gauge for how successful you can be. Now, in this case, when I grabbed that data 386 days ago to now, today, September 16th, I know it says September 4th, I have to change that, September 16th, 2020, I have made total profit $18,754. Now that's over $8,000 in premium. When I eventually sold the stock, whether I sold the stock throughout the year, I always had skin in the game with 3M. This is why I'm able to use 3M, because it wasn't a one-off trade or maybe a couple trades. I always had skin in the game with 3M. So this is why this study is relevant. When I ultimately sold the shares, I made $8,700, over $8,700 in stock appreciation. And over the course of the 386 days, I collected damn near $2,000 in dividends. Now, as we scroll down and look at this, I love saying food on the table, man, because this is real money. I mean, literally, I could peel this money off and put it on the table, okay? Trades have closed, okay? So about 386 days is about 12 months, 12.75 months, selling premium and dividend collection, right? Because that's real money monthly, okay? I'm not going to cherry pick and use the stock sale as income. We'll use that at the end, all right? So we can have a comparison. I made $9,900 on premium and dividends. And if you divide that out, 12.75 months, right? Divide that out, that's $782 a month. I don't know about you, man, but if I can generate $782 a month doing this, using a conservative, great stock like 3M, I tell you what, that's success. Now, the buy and hold investor, they did put money on the table as well. And that's through their buy and hold of 300 shares with their dividend. So they picked up some $2,100 or $171 monthly. Hey, that's money on the table. And to be honest with you, if you're a smart investor, you would drip invest that and pick up some additional shares. But hey, if it's cash on the table, there is a great comparison of premium selling versus buy and hold. Now, let's talk about the argument of buy and hold. You know, who wins this? Well, since that day that I bought 3M was trading for $166, and I remember that trade. I bought 100 shares. I started to pick up shares to the point where I picked up 300 shares. That's why we're using 300 shares as the barometer here. If you look at the 386 days, this is where we're at. I bought the shares at 166. The shares are currently trading 169. So I would have missed 1.6% in stock appreciation, right? So by me selling the shares at 166.50 and not holding them and selling them at 166.37, I would have missed that 1.6%. Now, that's not much. And in fact, that tells me the stock traded sideways. And that's what we're looking to do. We want that stock that trades in a range sideways to higher, right? That's the key here. That's why I love Chevron, man. I love 3M. I love JP Morgan. But look, let's get to the meat and potatoes of this post. This is it right here. Now, again, I'm not cherry picking here. I used an average of 300 shares, okay, because throughout the year, I didn't have any more monthly sales of more than 3 contracts. I could tell you now, I probably did 15 premium sales, right? Where I did a covered call. I think I did 1 cash secure put in there, but the point is, over 386 days, using an average of 300 shares, look at that. This is stock gain in profits, and that's compared to the buy and hold. So the buy and hold investor would have made 1.69%, whereas all of my selling premium profits, 37.53% profit. Okay, that is cash on cash. It takes my total amount that I used to invest versus someone that would buy and hold, taking that entire amount. There is that vindication I talk about. And when we scroll down, okay, because I know some of you are saying, look, you probably left out the dividends. You did this. No, not at all. What you're seeing here on the left is my selling premium cash on cash gain. That includes what we talked about up here at the top. The premiums, the stock gain, the dividends. Okay, that equals 37.53%. The buy and hold investor would have picked up the stock move and the dividend collection they would have made in the same 386-day period 3.49%. And as I mentioned in my write-up, you know, it's a hands-down winner for me selling premium. But the buy and hold investor in this situation doesn't even beat the S&P 500 historical annual returns of 8%. And I'll tell you what, that's on the low side, because I think the annual returns might be around 10% now. And then, of course, I always provide a nice little chart. Look at that chart when I bought the stock way back when. I'll tell you, look, whether you're selling premium or you're buy and hold, great companies are always good to invest in, because at the end of the day, you know what you're holding on to, right? A great company. You're not buying a fly-by-night company that may not even be around 386 days later. You've collected fat dividends. I tell you, learn how to sell premium to add to that. You know, I always talk about doing two things. I love to double my dividends. I've talked about this countless times, where I'll take a great stock like this, and during the non-event months, I will go ahead and try to double my dividends. And what I mean by that is I try to pick up a 30-day covered call premium that would equal what a dividend distribution would equal. And usually that is a 30 delta option. So the chances of my shares being taken away are minuscule. And of course, if I have my skill and I buy back the option, I'm not going to have my shares taken away. Love doubling my dividends, man. Right now I'm doing it on Bristol Myers. I just love it. I do these little games to keep me interested and excited. What do I always tell you? You have to get in the game. And I know for a lot of you, to be honest with you, if you're not excited about it, you're not going to get in the game. So let's go ahead and get to this workhorse trade really quick. If you go to my channel, you're already there. Notice this video right here. Okay, this is when I talked about the 3 wheel trades that I had in the works. DraftKings, Pinterest, and Workhorse. And this is when I did my due diligence on Workhorse. I laid it out in this video exactly why I did it, what my expectations were. And I'll tell you what, it's worked out. Let's talk about the covered call trade that I did and why I did that versus another cash secure put. I know I'm getting long in the video here. If any of that interests you and you want to be a part of my upgraded C2P dashboard, just go back to c2pdashboard.com, click on the upgraded link, see what we do. And to be honest with you, I give you 1 free month if you sign up. It is one of those deals where I just get this feedback that just swells my heart. You know, people are telling me that, one, what I'm doing is, and what I'm charging, it's absolutely absurd, absurdly cheap. Just the content I provide and the amount of usable, upping the game value content I provide. I'll tell you, man, it keeps me motivated, and I always feel like I'm helping somebody out there. Well, look, let me try to help you if you're a small ball player right now. Let's talk about Workhorse. I won't recap the cash secure put trade. But what I will say is this. Imagine I did that cash secure put trade here, which I did. I got paid $2.25 for that, and you know the deal. Or maybe you don't. I bought it back for 95 cents when I knew I wasn't going to get the shares. It was trading at around 18, and I decided to buy the option back. And to be honest with you, I had plans of doing a cash secure put up here, and I thought I was going to get about $3. Well, wasn't able to do that. I didn't act quick enough, and Workhorse rallies into the 20s. So now I'm sitting here when the stock is trading at about 22.36. And to be honest with you, all of my wheel trades are not going to expiration. I mean, I bought back the DraftKings. I'm buying back the Workhorse. To be honest with you, I could probably buy back the Rocket Mortgage or the Pins as well. But with that said, when it's trading at 22.36, I decided, forget this cash secure put thing. I want to own these shares, because what I want to do is benefit from this rally that's happening in the stock. Now, the stock itself, the company itself, doesn't have earnings. And to be honest with you, they don't have much news, but there is anticipation of news. See, they have their hat in to be the last mile truck provider for the U.S. Postal Service. I don't know if you know who Workhorse is, but they make electric trucks. Well, with the momentum of all the investors in Tesla and NIO, so I believe there's more upward momentum than downward momentum. And of course, I want to be a part of that. When I got an email saying, look, why did you do the covered call versus the cash secure put? I'll be honest with you, I wanted to get skin in the game. You know, I could have done this cash secure put, but it didn't take but about a day later. I'd have been buying that back and doing another one. Don't get me wrong. Love the premium, love pocketing the money, but I wanted the stock appreciation as well. Because when I end up buying it at $22.36, I write the $27.50 out of the money, and I end up getting some $3.31. Do the math on this. This is insane. First of all, when I bought back my first cash secure put, I put $1,250 in my wallet. When you combine $1,250 with the profit that this will bring, the new covered call will bring, by the way, it's only on 500 shares. But when you combine these two, and this trade probably is a 45-day trade, that's going to pocket me some $5,400. I mean, this is on a $22 stock. You small ball players, I mean, if you learn this strategy, you can actually get in the game. Look, you don't have to do 1,000 shares or 500 shares like I do. You could do 100 shares and have the same gains, man. Do the math. Just do the math on the original trade, okay? I did a 16 cash secure put, meaning I put up $16 to buy somebody's shares, okay? 1,000 shares, that's $16,000. They paid me $2.25. Do the rough math on that. 10% of 16 is $1.60. They paid me $2.25. That's damn near 20% cash on cash. Where are you making that with just a simple buy and hold strategy? I'll tell you, you're doing pretty damn good if you're getting 20%. In fact, you're beating the S&P 500 hands down. But here's the deal. This is literally in 2 weeks. 2 weeks, okay? I ended up cutting that short when I bought it back. But the point is, that's what we premium sellers do. Now, for all those that emailed me, I hope I answered your question. You know, I went ahead and did the covered call instead of the cash secure put because, one, I wanted to get skin in the game. Two, I wanted that out of the money covered call strike. From $22.36 to $27.50, plus they laid another $3.31 on that trade. Look, that is real money. And I did it on 500 shares. So what is that? About $1,500 in the wallet up front while I wait for this trade to play out. I'll tell you what, man, putting money on the table now, I'll tell you, man, you could pay the bills, live the good life. It is so empowering when you can really take your own financial future in your hands and have success. You can learn this. Trust me, if you're out there, you got your head in your hands, you're wondering how you can make the ends meet, learn this. Okay, follow me. Let me be your guide. Okay, get your financial education, right? You get your experience. You too can have the same kind of success. But you got to put in the homework, right? You got to get off the bench and in the game. So, hey, look, I'm going to leave it right there. Remember, I got that 1 free month over there for you. If you liked anything you heard and you like what we're doing, I want you to subscribe to the channel. I do this twice a week, but I usually do my videos once a week. I show you a trade, we talk about it, so maybe you learn something. And hey, look, if you like this video today, bang that like button. It truly does let me know you like what I'm doing. Be safe, be healthy, most important, be lucky. And until next time, may all your covered calls be profitable.